Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Apple report for Wednesday, August 16th, 2023. Before I click through all the charts, just want to encourage you to please click like if you haven't already. Please subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Apple report. Daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, the NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor. We're always scouting out 20% moves or better on those underlying stock picks. And we offer a 5-day free trial up front. So if you sign up for the subscription, you have 5 days to check everything out. And if you don't like what you see, you can bow out at no cost to you whatsoever. So on with Wednesday's Apple report. Take a look at the big picture as usual. We had a buy signal 3 months ago or so when we settled above the 168.83 long-term channel top, indicating 224.74 as an eventual longer-term objective. At one point, I was talking by the end of the year, not so much anymore. I do think 168.83 remains in reach, is expected actually, holding below this 180.72 channel bottom, an area that can absorb buying. I've reduced it to a weekly resistance area. The truth is it could contain buying into September, but just weekly resistance now below which, because I don't want to confuse the degree of importance between 180.72 and 168.83. 168.83 I'm maintaining as an annual level. 169.94, a downside 3/8 Fibonacci, forms that range, multi-week containment. But 180.72 able to contain weekly buying pressures, and below which 168.83 remains a 2 to 3 week target, where I've been saying we could bottom out through the rest of the year, and from here rotate higher again as we move into next year, as we move into, this is where kind of what I'm seeing here as a possibility, where we eventually make our way up to this channel top, and that puts us into the second quarter, if I'm looking at the graph properly, second quarter of 24 as a possibility. I mean, this is just a scenario that, we've seen play out many times before. So I'm going to leave it at that for the downside, other than the day itself. And let me find the proper chart. I will find it right here. One's actually, I think there's a better one than that. Yeah, it's right here actually. So I'm going to go back to this chart and just give you context of 174.30 and the 169.94 area. Then we'll zoom in here and show 174.30, 176.39, believe it or not, is a gap area. We would close that gap if we test 176.39. So we got down to 176.55 a few days ago and came off of it. 176.39 able to contain intraday weakness. And if we break 176.39, 174.30 is likely today. 174.30 is this initial high that followed about 2 weeks of consolidation. But, we did push back above it and broke back below it. But I'm going with 174.30 across these highs here as our session containment level only. Not an area where you can buy through the rest of the week. I do still think the upper 160s are calling, so to speak, holding below 180.72. So 176.39, decent intraday support. Day traders can buy that in anticipation of a possible bounce back to 179.95 to 180.72. But keep in mind, we are heavy through the rest of the month below 180.72, so don't fall in love with any of these support levels. In fact, if we break 176.39 or open below 176.39, 174.30 in reach today, where a daily low can be placed. And yes, if we close today below 174.30, we're probably just 2 to 3, 3 to 5 days away from continuing south into that significant zone of support between 168.83 and 169.94, where once again we can bottom out through the rest of the year, quite possibly well into next, and above which a long-term buy signal remains in effect. So as I've been saying, this sell-off below 180.72 is a bit counter-trend in nature. There's still this remnant updraft following that long-term buy signal, and so we may fail to reach the upper 160s, but as long as we're holding below 180.72, I have no way to think about this other than, yes, the upper 160s expected. Now, for the upside, once again holding above that 176.39 level. Will keep 180.72 in reach. 180.72 is preceded by a short-term channel top at 179.95, making it less than a 1 point range that is meaningful, able to contain buying through next week, and once again below which anticipating the 168.83 level over the next 2 to 3 weeks. Now, if we do close today above 180.72, I think that this will have played out to be nothing more than a head faked to the downside. In other words, setting up the sell signal, we close back above 180.72, and that is a clear rejection of a meaningful sell signal below 180.72. That in itself setting off short cover activity, long entry, however you want to define it, closing back above 180.72. And I would anticipate, I don't think I have an image for it, but 189.71. And when I say I don't have an image for it, I do show 181.22, the steeply descending 1/3 speed line. And it is there today as a minor point. And I don't see that as the critical level to settle above right now. I think merely closing back above 180.72, I don't think you should be short the market as we move into September. If you bought the 169 out of the money puts and your time horizon is 1 to 2, 3 weeks out, I would suggest liquidating those out of the money puts and perhaps reaching for 188 or 189 out of the money calls that don't expire for at least a couple of weeks, because that is the next play. And as I've been saying as well, if we close back above 180.72, I think that marks a good high through September. And I think over time, over the next month or two, by the end of October at the latest, we could push onto new highs and into this low 200 area, 205.53 and climbing. And so if we were to close back above 180.72, this area here, you might consider, if you're an options trader, reaching for 205 or 210 out of the money calls that don't expire. I'd go 3 months out on that. I think it'd probably take closer to 2 months. And within a week or two, we should then reach 189.71, where we can top out on a weekly basis. So, if you're a 3 to 5 day swing trader, for instance, and we close above 180.72, nothing to be but long. Then anticipating 189.71 probably by the end of next week, where you can liquidate that long position and perhaps even go short back into the low 180s. It would be a settlement above 189.71 at this point in time, and we're a long way off from that. But if so, then we've got another 2 to 3, 3 to 5 week buy signal up to the 205.53 formation, where we can quite easily top out on a monthly basis. I don't think there's really anything else that needs to be said. I'm going to leave you with this image here. This pretty much says everything, not only for the day, but as we move into next week. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Thursday's Apple. You have a great evening.